employees being set up and paid by the payroll department. Okay, that's actually the main reason why we have a separate division for HR and payroll, because we want to make sure that the person who's setting up these new joiners will differ from the person who is paying their monthly salary. Okay, so this will reduce the risk of fraud. This is the general implication here. Okay, so right now I want to just focus more on the direct controls first. So now we have three, and then there's one more here. The cashier reconciles the bank statements to the cash book, and the recons are reviewed by the financial controller, who also investigates all reconciling items and evidences this review by way of signature. So what is the benefit of this? Again, let's go back to why do we perform a recon, guys? Why do we perform a recon? Can you guys state in the chat box? Because I feel like I've been repeating it for a few times. So why do we perform a recon? Is because recons will ensure that errors are identified and resolved on a timely basis. Yes. Okay, to check any error. Yes, Aida. To basically ensure that fraud and error are identified and resolved on a timely basis. So this is the direct implication. And for the general implication, so we can state that the bank recon is a key control which will reduce the risk of fraud. Okay, so right now, what do you guys think is the recommended control here? Okay, basically, not the recommended control, the TOC. Okay, right now they're asking us for the test of control. So when we are talking about a test of control, it should relate to whatever that is in the scenario here. We are testing whatever that is here. Okay? It will not go too far away. Okay, so right now they stated that the cashier reconciles the bank statements, and this recon is reviewed by the financial controller. So a form of test of control is we just review this file of bank recon to confirm that there is this evidence of signature by the financial controller. And the other thing that we can do is we can reperform the bank recon. Okay, we reperform this bank recon and compare to the bank recon made by the cashier. Okay, and then we will basically investigate, has there been any differences with the financial controller. Ali, I think you're confused. Inspect cash book tu maybe if we are talking about audit risk. Okay, again, when we are doing test of control, you punya subject matter should usually takkan lari from what is here. So right now we are talking about the bank recon specifically. So maybe instead of looking at the cash book or the bank statement kan, we just look into the bank recon pun dah cukup actually. Or maybe kan instead of cash book tu is if we are doing the substantive procedures. Actually, you dah confused between that two lah. If let's say kan kita nak look into the specific dollar amount in the bank statement and in the cash book, this would be a form of substantive procedure. Okay, this is what we are going to look into next week. However, when we do a TOC, we are testing on the controls in place. So the control that they have is in place is this review and this signature by the financial controller. So that's why when we are doing a TOC, test of control, we will basically test this control, which is the review. Okay, we are going to check whether did they actually evidence this by way of signature from the financial controller or not. Okay, so there are 4 key controls here. Can you guys try to attempt these 4 key controls? I've given you guys a little bit of hint on the test of control for this last one here. So I hope that you guys can try to attempt on the test of control juga, okay? Don't just leave the test of control. Try your best to answer on the test of control sekali for these 4 points, okay? Well, first point is this one. And then we have this, the second point, the pre-printed forms, third point, and this is the fourth point, the reconciliations, okay? So I'll give you guys 4 times 8. So I'll give you guys 15 minutes for you guys to complete this for 4 key controls. So we will discuss by 9:58. Okay, see you guys. Yeah. Okay, guys, your time is up. It's 9:58. Please submit your answers to the Padlet. Okay, so let me share my screen. Okay, so I see your answers. Okay, let's start with Regina's answer. Okay, jom, let's discuss. Okay, so the first point, is when new equipment is acquired, blah, 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 blah. Okay, this confirms that the classification is accurate and this will prevent, okay, this is one mark. As HR department, there is a segregation of duties. This is correct. This will reduce the risk of fraud. One mark here. Okay, this will reduce the risk of fictitious employees being set up and paid by the payroll department. Okay, this is also one mark, right? The recon made will ensure that errors are identified and resolved on a timely basis. This will potentially reduce the risk of fraud. Okay, so you have explained quite clearly, Edna. Okay, good job here. Maybe you can try to attempt on the TOC. Okay, let's try to think about it, right? TOC, we are basically testing on these direct controls that we talked about here. Okay, so when new equipment is acquired, then, all right, and then we can see them. Let's think of what is the subject matter within this direct control that we have talked about here. The subject matter can be on the classification and basically the guidelines established by the FD. And another thing is who sample checks that the capital or revenue expenditure has been correctly applied. Okay, so there are two things that we can actually review here. Okay, so the first things first is we want to review this sample of, okay, noting the classification on the purchase order. So this is the subject matter here, okay? Let's talk about this. Right now, we want to review, the first things first, review a sample of, it's a different thing tau. Capital expenditure purchase order is different from purchase order. Okay? CapEx punya purchase order is specifically for purchases of non-current asset, so it's different. Review a sample of CapEx POs, purchase orders, and compare the classification. Compare the classification noted with the FD's guidelines to assess whether the classification was correctly undertaken or not. Okay, and another thing is the FD will sample check this, so there will be some kind of evidence of this check. Okay, so we want to review the PO, the CapEx PO, for evidence of the FD's sign. Of FD's sample check by way of sign. Okay, so this is just an example of how we basically want to relate the TOC. Okay, we will try to look for the key points or the subject matter within the direct control that you have stated from the scenario here. Okay, so let me pick another person for me to review. Okay, let's look at Alia's answer. Oh no, this is Pomeranian. Sedap. Kita tak refresh ya. Tadi I feel like ada lagi, but it's like not reflected here. Dia macam dah all over the place a little bit. Okay, tak apalah. Nanti I will review balik. Okay, so let's move on. Okay, sebelum cakap. Miss actually kan saya confused. Kan notes Miss cakap pasal roti bila nak guna. Okay, so sama lah. Basically roti tu is just more or less of this procedure here. Okay, what word are you going to use? When we are doing TOC kan, basically based on my module kan, we will use row T, and then we will think of what is the process or what is the document. Okay, so when we are brainstorming on the process or document, this is the one yang I cakap it will relate to the scenario. Okay, it will usually relate to the scenario. Roti ni is just on the procedure. Okay, it can be review, recalculate, nama tak muat. Recalculate or reperform. O stands for observing. T stands for test data. I stands for inspect. And E stands for inquire or discuss. Okay, this is more or less for you to get a idea of what kind of procedures that you guys can do when we are doing a TOC. However, the subject matter here, this is the subject matter, okay? This is the subject matter. We will have to think about what is the process or what is the document. Okay, so this is where review ni is basically the procedure, right? So the subject matter is the CapEx PO and the classification noted, the FD's guideline. This is the subject matter. And the other thing that we want to do is the purpose. Why are we doing this? The purpose is basically for us to assess whether the classification is correct or not. Okay. Right. So now we have the procedure, we have the subject matter, which is in purple. Kita, yeah, if you cakap inspect pun also can, whichever that you think is more comfortable lah in this roti. So you can use review, you can use inspect. Okay, if let's say we are discussing with somebody, instead of using discuss, you can use inquire. Okay, so basically this is just for you to get an idea. All right, so I usually use review, but like it's up to you guys lah, basically. Okay, faham Alia? It's just basically more or less on the procedure. Okay, so let's move on back to the question. Because I don't know why, dia macam I suddenly cannot find yang lain. I feel like just now I saw like other people ada upload, but now it's gone. I don't know, maybe dia dah like ke bawah or something. But yeah, maybe I'll like look into that another time. Okay, so right now let's discuss on the deficiency pula, okay? Are you guys ready? Let's look into the deficiency. Okay, so the first deficiency here is the company has a small internal audit department. Again, what is the purpose? What is the role of the internal audit, guys? What does the internal audit actually bring to the company? Can anyone tell me? Yes, they will be monitoring or basically testing the operating effectiveness of the internal control. Basically, they are responsible for monitoring controls. Okay, if basically there has been a reduction in their program right now, the risk or the implication is that if the team has staff shortages, they may not be testing the internal control sufficiently. Okay, IA may not be testing the monitoring controls sufficiently, which could lead to a reduction in the effectiveness of internal control. Okay, so what is the recommendation here? Okay, basically we want to consider two things. Okay, we cannot just tell them to recruit additional employees. It is an option. Okay, one, we can ask them to senior management to recruit additional employees to join IA, to join the IA department. Another thing that we can do is secondment. Okay, you guys know what is secondment? I rasa macam this color is not clear lah. I do like a different color. You guys know what is secondment? Basically, secondment is where employees from other departments are seconded. Tapi like outsource is externally. Okay, so kalau secondment is usually internally. Okay, right now employees for other departments, maybe finance. Orang finance right now, we ask them to help us out, to help out the internal audit, to assist them with this audit. Okay, secondment from other departments, such as finance. Okay, to assist IA in the testing of the controls. Okay, however, we have to also take into consideration, we have to make sure that they are not reviewing the controls that are operating within the department. For example kan, finance, kan, let's say we are talking about finance employees, we cannot ask them to test controls within finance. Because kat situ there may be a self-review threat. Okay, because it is their own department, right? So there may be bias. Okay, so we have to make sure that they are only reviewing controls of other people punya department, not their department that they usually work in. Okay, so that is also something you can include in your answer. Another thing is, I just want to like shortcut my answers lah, so that nanti at the end I will show you guys my answer juga. Okay, the next point is, like I said just now, right, guys? Basically, there will be an annual capex budget set by the board, and then they will have to make sure that they do not cross this threshold. If they exceed this, there has to be some form of authorization by the senior management. Okay, so right now the issue is that they have exceeded the budget. Okay, right now, how did this even happen in the first place is because that there may be no reviews. It appears that PO for capex, the purchase order for capex, have not been authorized. And basically, they have not made any agreement or reference back to the annual capex budget. That's how they can actually exceed this. And have not been agreed back to the capex budget. So that is how they have basically exceeded their budget. So this could result in increased costs and reduced profits. Okay, so what is the recommended control here? Okay, recommended control is basically we will bring in the management accounts. Okay, I'll just give short points first. Management accounts, again, what is the purpose of management accounts? They will compare between the budget and actual. Okay, and any variances, any significant differences will be investigated. So that's where the management accounts is very useful here, is because right now they should be comparing between the actual versus budget. Okay, so next is basically we tell them, okay, we are telling them right now they are not comparing. The issue right now is that they are not comparing the budget to their capital purchase order. So we have to make sure this capex PO is being compared to the budget as part of the authorization process. So any amount that is in excess of the budget should require authorization. Okay, who do you guys think will authorize this? Who will basically authorize any increase, any excess? Okay, yes, so Alia's correct. Basically, the authorization can be made by the FD or the board. Okay, so moving on to the next point here is the same concept as the last point, right? This point here. IA will only have visited 4 large centers and 5 of other centers randomly selected. Even from the scenario here, you guys can talk about how they actually have 45 training centers. Okay, they have 45 training centers. However, they have only covered 9 out of 45 training centers here. So right now, their program of visits, okay, again, this is also a subject matter here that we will use in our recommended control, okay? So we bring in the fact that they have 45 training centers. So if they continue out with this current program of visits, it is impossible, okay? It is basically going to be impossible for them to physically inspect the NCA. It is impossible to physically inspect all sites. Inspect NCA across all centers. So there is an increased risk. There will be an increased risk of asset being misappropriated or obsolete. Okay, so what can we do, guys? Okay, I hope that you guys can still remember from the answer just now, right? The internal audit will basically review balik this program of visits. Okay, this program of visits. We ask them to review. Okay, we will basically tell them, okay, the IA should review this program of visits, okay, to assess if additional resources could be allocated to ensure that all 45 training centers are visited over a shorter period of time, okay, to ensure that all of the physical assets can be verified and completed. All right, so let's finish this up first and then I'll show you guys a preview of my answer. Okay, next is basically all members of the payroll department can amend employee standing data. It's the same thing, right, guys? Whenever all members of the payroll department can amend the employee standing data, What is the risk here? There can be fictitious employees. Nampak tak? I just tukar according to the scenario. Just now we were talking about fictitious suppliers. Now we talk about fictitious employees may be set up and paid. Okay. Therefore, there is an increased risk of fraud. All right. Because this is due to the unauthorized changes. So what do you guys think is the recommended control here? Based on what we have learned just now. Basically, we will have to do two things. We firstly tell them, okay, you should not do this. Basically, we tell them that only authorized senior personnel within the payroll department should be able to amend this employee's pending data. And another thing we want to explain on the exception report. Exception report plus review. Okay. Next is the senior payroll manager reviews the list of bank payments and agree this to the payroll records. If any discrepancies are noted, the senior payroll manager always makes the adjustment in the payroll records. So here the deficiency is a little bit more subtle, right? It's not very obvious. But what is the issue here? The issue here is that there is a lack of segregation of duty. Lack of segregation of duties. So you guys should not just say lack of segregation duty and not explain this. Okay, you have to explain in this point here. How is there a lack of segregation of duty? Okay, basically the senior manager, right now the senior payroll manager could just increase or basically amend the amounts to be paid to certain employees. Let's say I like Alia maybe, so maybe I'm paying Alia more. Then basically right now I tak suka Farha, so I cut down Farha punya pay pula. So that's an example right now, okay? So let's bring in an example like that. The senior manager could fraudulently increase or incorrectly amend the amounts to be paid, process this payment as well as amend the records. So this could lead to an increase of payroll costs. Okay, or you can say reduced profit. So we have to make sure that there is more segregation of data. So we have to say the senior payroll manager should not be able to process changes to the payroll system as well as authorize. Okay. So the authorization of the payment. Authorization of payment should be done by somebody who is independent, who is outside of this department. Okay. The authorization basically should be made by somebody outside of the department, such as the finance director, by individual, independent, outside of the department. For example, the FD. Alright? So we're down to the last point, guys. Okay. Last 2 points lah, okay? So credit limit remain unchanged. Okay, I can go skip that because that's repetitive, right? So right now kat sini, the next point here, each new customer is allocated a client service manager. Okay, who is responsible for managing the customer relationship and maximizing sales. Standard credit terms for customers are 30 days and only those that are over 90 days baru they will basically notify. Okay, only then they will basically notify the customers. And another thing, right now the relevant client service manager is the one who will chase payment directly. Who is the one who is responsible for this? Who will usually chase the outstanding debts, guys? Will it usually be the client service manager? This is usually not the case, right? It should be the credit controller, yes. Okay, so right now they don't have a credit controller. Right now there is 2 risks that you guys can explain right now. Okay, first things first, then you explain that basically they are only chasing their customers after 90 days. So this is basically in excess. This is in excess of the 30 days credit term, which will lead to poor cash flow. Okay, or irrecoverable debts. Or another point that you guys can actually talk about is, additionally, we talk about the client service manager. Okay, so this is not their job, right? So if the client service manager are the ones who are chasing the debt, then they will be more focused. Client service manager, I buat CSM je, okay? Client service manager more likely because they are trying to maintain relationship with the customer. So they are more likely to focus on customer relationship and may not really chase the outstanding debts. Okay, relationship and increasing sales, so they will not be focused on chasing debts. So right now, what is the risk? Same here, this could lead to a risk of irrecoverable debts. Okay, as a result, irrecoverable debts, or there could be a potential loss of revenue. So the recommendation is right now we tell them you have to have your own credit controller. We ask them to appoint a credit controller to chase any outstanding sales invoice which are more than their credit limit of 30 days. Okay, whatever it is, it also has to be shortened. Whatever sales invoices that are more than 30 days should be chased. It should not be 90 days because 90 days is too long. Okay, tak guys? Do you guys have any other questions on this scenario here? Let me just briefly show my screen. Okay, so don't worry about this. I will basically like upload my answers to the Timba Flights in case you guys want to refer to it later on. Okay, but basically it's just me explaining it in more detail here lah. Okay, do you guys have any questions on this before we proceed to the next question? Okay, if you guys don't have any other questions, let's go for maybe a 15 minutes break before we proceed